Investing can seem intimidating, but it's one of the smartest ways to grow your wealth and achieve financial freedom. The good news? You don't need a lot of money to get started, just a clear goal, basic knowledge, and consistency. Let's dive into a step-by-step guide to help you start investing today. 1. Why you should start investing now. The earlier you start investing, the more time your money has to grow through compounding. Compounding allows your earnings to generate even more earnings over time. For example, if you invest $100 monthly at an average 8% annual return, you could have over $150,000 in 30 years. Investing also helps you beat inflation, ensuring your money retains its value in the future. 2. Define your investment goals. Ask yourself, what am I investing for? Whether it's retirement, buying a home, or creating a passive income stream, your goals will shape your strategy. Short-term goals, 1 to 5 years, consider safer investments like high-yield savings accounts, bonds, or certificates of deposit, CDs. Long-term goals, 5+ years, look into stocks, ETFs, or index funds for growth potential. 3. Understand the basics. Here's a quick breakdown of common investment types. Stocks. Ownership in a company, offering high potential returns but higher risk. Bonds. Loans to companies or governments, offering steady but lower returns. ETFs, index funds. Low cost, diversified investments tracking a market index like the S&P 500. Mutual funds. Professionally managed funds, often with higher fees. Real estate. Physical properties or rights, real estate investment trusts. Each has its pros and cons, so diversify to minimize risk. 4. Start small, you don't need thousands. Gone are the days when investing required large sums of money. Today, you can start with as little as $5. Fractional shares. Platforms like Robinhood, Fidelity, and Public let you buy a fraction of expensive stocks. Robo-advisors. Betterment or Wealthfront automate investments based on your goals and risk tolerance. Micro-investing apps. Apps like Acorns and Stash help you invest spare change from everyday purchases. 5. Automate your investments. Set up automatic transfers to your investment account each month. This set it and forget it approach ensures you stay consistent without overthinking. 6. Avoid common mistakes. Don't chase trends. Stick to your plan instead of trying to time the market. Diversify. Spread your investments across different asset types to reduce risk. Don't panic sell. Markets fluctuate. Staying the course is often the best strategy. 7. Choose the right platform. Select an investment platform that aligns with your needs. Robinhood. Great for beginners with commission-free trading. Fidelity or Vanguard. Ideal for long-term, low-cost investing in ETFs and index funds. Betterment. Perfect for hands-off investors looking for automated growth. 8. Keep learning. Investing is a journey, and the more you learn, the better your decisions will be. Recommended resources include The Simple Path to Wealth by J.L. Collins. Investopedia's beginner-friendly guides. Podcasts like The Money Guy Show, or Bigger Pockets Money. Investing isn't just for the wealthy, it's for anyone willing to take the first step. By starting today, you're giving yourself a head start on building wealth and securing your financial future. Remember, success comes from consistency, patience, and smart decisions. Start small, stay focused, and watch your money grow. The best time to start investing was yesterday. The second best time is now, so take action today.